This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus has decided to proceed with a planned April oil output increase, the group said on Monday, a move that follows U.S. President Donald Trump renewing pressure on OPEC and Saudi Arabia to bring down prices. The increase is the first since 2022 from OPEC Plus. Oil was trading 2% lower towards $71 a barrel at 1900 GMT. 8 OPEC Plus members that are making the group's most recent layer of output cuts held a virtual meeting on Monday and agreed to proceed with the April increase, OPEC said. The increase is 138,000 barrels per day according to Reuters calculations.
Oil prices extended losses on Tuesday following reports that OPEC Plus will proceed with a planned output increase in April, while markets braced for the impact of U.S. tariffs on Canada, Mexico and China, as well as Beijing's retaliatory tariffs on the U.S. Brent futures fell 57 cents, or 0.8%, to $71.05 a barrel at 0650 GMT, as U.S. West Texas Intermediate crude eased 39 cents, or 0.6%, to $67.98. The current downward trend in oil prices is primarily driven by OPEC Plus' decision to increase output and the introduction of U.S. tariffs, said Darren Lim, commodities strategist at Philip Nova.
Moving on to the top news in the energy sector.
Europe soaked up most U.S. liquefied natural gas, LNG, exports for the second straight month in February, as cold weather and strong prices pushed up demand for the supercooled gas across the Atlantic, according to preliminary data from financial firm LSEG. The U.S. is the world's largest exporter of LNG and continues to play a major role in supplying Europe since Russia's invasion of Ukraine significantly reduced the amount of Russian gas piped to Europe. In February, the U.S. exported 8.35 million metric tons, MT, of LNG, shy of the monthly record of 8.6 MT hit in December 2023 and just short of the 8.46 MT exported in January, LSEG data showed. There were 3 fewer production days in February due to the shorter month.
Indonesia will offer 21 energy projects worth $40 billion this year, its energy minister said in a statement released on Tuesday, including an oil storage site and an oil refinery, as well as projects utilizing coal to produce dimethyl ether. The coal projects, intended to slash the country's liquefied petroleum gas, LPG, imports, will have funding from the new sovereign wealth fund Danantara Indonesia, Minister Balo Lahadalia said. The projects will be proposed in several areas in Sumatra and Kalimantan. Next, we have the top news in metal markets. Gold prices inched higher on Tuesday, supported by fears of a global trade war as U.S. President Donald Trump's new tariffs on imports from Canada and Mexico came into effect, along with a doubling of duties on goods from China. Spot gold was up 0.2% at $2,898.25 an ounce, as of 0805 GMT, after rising nearly 1% on Monday. U.S. gold futures gained 0.2% to $2,907.90. It's a modest move so far today. The clear deterioration in global trade relations and the weaker U.S. dollar on fears of a sudden slowdown in U.S. growth gave the market a solid boost overnight, Capital.com's financial market analyst Kyle Rada said.
London copper prices eased on Tuesday amid fears of escalating trade tensions as U.S. President Donald Trump slapped tariffs on Canada, Mexico and China, while hopes of stimulus in China helped curb the losses. 3-month copper on the London Metal Exchange slipped 0.6% to $9,363.05 a metric ton, as of 0704 GMT. The most active copper contract on the Shanghai Futures Exchange lost 0.1% to 76,940 yuan, $10,566, a metric ton. Copper in London trades lower amid demand fears after Trump went ahead with slapping tariffs on its main trading partners, said Ole Hansen, head of commodity strategy at Saxo Bank.
We will now look at the top news in the agricultural sector.
crop insurance price projections that can be used to determine indemnities for the 2025 growing season are the lowest for soybeans since 2020 but up a few cents per bushel for corn compared to last year, data from the U.S. Department of Agriculture showed on Monday. The USDA's risk management agency set crop insurance base prices at $4.70 per bushel for corn and $10.54 a bushel for soybeans across most of the U.S. crop belt. The prices reflect the average closing price of Chicago Board of Trade December corn and November soybean futures during the month of February. For farmers who insure their crops against disaster, these base prices can be used to assess the value of lost bushels.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.